Thank you very much. So then we would like to share with you today the partnership that we have with the START network in terms of how we have brought all of this to life. So Sophie, thank you very much for the definition. But on our side, we don't really worry too much about the definition because really what's important is to be able to get the money out to the beneficiaries as quickly as possible using a pre-agreed financing plan that ensures that the money is dispersed very quickly, but there's also much greater transparency and accountability. I don't have control of the slides. Maybe can we get somebody to move the slides? Thank you. So again, very quickly, for those who don't know who ARC is an agency of the African Union that's been set up explicitly to deal with the increasing frequency and severity of natural disasters. The next slide, please. Then we have within ARC a development agency that does the political engagement, the capacity building, and also an insurance company that actually does the risk transfer. Moving on in the interest of time to the next slide. Then just to quickly share with you, currently ARC is active in 35 countries out of the 54 countries in Africa. And the membership of ARC is voluntary. So these are countries that have seen the value of what ARC does and decided to join. Moving on to the next slide. Then again, very quickly, since the inception of ARC, we have collected over $100 million in premium, paid out about $65 million in claims to countries. And we are really delighted about this fact because very often when a disaster strikes, ARC is the first dollars that a country receives to be able to very quickly respond. We have provided over $720 million of insurance coverage. And after this year, we will have got across the billion mark, which again is a substantial impact on the continent. Then moving on to the next slide, please. Then maybe just to spend a little bit of how ARC works. This has already been covered by Ben and Sophie, but essentially the whole idea is that drought, especially, which is the example that we have here, is a foreseeable disaster. You know in good time when a drought is going to occur just from the rainfall pattern. So what the ARC mechanism does is it includes an early warning component. We make the rainfall data available to countries so they start to know and anticipate that the harvest is going to fail. And then instead of following the traditional approach where a disaster happens and then there is an appeal for humanitarian assistance, which usually arrives very late, 3 to 6 months after the disaster occurs, insurance can be used as a tool for quick disbursement so that insurance pays out really at the point the season ends before people have to take drastic measures such as reducing their food intake, selling their productive assets, taking their children out of school so that they work to support the family. And we find that this early disbursement mechanism coupled with a pre-agreed financing plan and early warning really help to move the needle on disaster risk management and financing, which saves lives and protects livelihoods. Moving on to the next slide. So then we have a case study of Senegal, where there was a very severe drought in 2019-2020, and we, in partnership with the Senegalese government and also with the START network, we provided insurance coverage, and we paid out $23.1 million to Senegal, both for the government insurance policy and the START network insurance policy, and this enabled very timely intervention. Moving on to the next slide. And then we have done a monitoring and evaluation exercise to see what the on-the-ground impact of this was, and we have identified 4 areas. The first one is improving the risk coping abilities of the country. So this helps people from slipping back into poverty. We managed to eradicate hunger through the provision of supplemental foods. We protected the livelihoods and the health and well-being of the most affected villages, and we have increased the resilience that the country at large has to climatic shocks. If you're interested in learning more about this, we have recently published a series of articles on LinkedIn, on our website, and on YouTube, focusing on one specific village in Senegal, and you can get the first-hand account and testimony from the people that benefited from the payout. Emily is going to go into a lot more detail on the ground impact. And Emily, over to you.
Thanks, Lesley. I won't go into too much detail, people will be happy to know. But hi, everyone. For those of you who don't know us, I'm Emily. I work for the START Network. We're a network of over 50 NGOs. And one of the key areas we work on is anticipation and risk finance. So we've had a bit of a foot in both camps for the last few years and have been working on ARC Replica together with ARC and WFP also, who are the other replica partner, for about 5 years or so. And so maybe if we go forward to the next slide, I'll just tell you a little bit about how it feels from the ARC Replica partner side, what it involves. So obviously buying the insurance premium from ARC is just one piece of the puzzle, but there's a lot of preparedness that comes in before that. So two particular areas. First of all, on the risk modelling side, so ARC agency work with different national governments that are taking out policies from ARC to actually establish technical working groups in country that work to customise the ARV risk model, which underpins the drought insurance policy, so that it's appropriate to the conditions in that country, and bring in things like local data on vulnerability, setting the trigger thresholds for action, etc. So as Replica partner, we're part of those groups and we provide our inputs into these decisions. And there's a lot of kind of interesting anecdotal evidence around that we've collected through being involved in those groups and having frontline kind of humanitarian implementers who have really, you know, the objective and mindset around supporting the most at-risk vulnerable communities, part of those decisions and feeding in data and stuff from their aspects. The second part is the coordinated contingency planning. So obviously part of ARC and the instrument is, you know, in setting up, we want to know what money do we need, when do we need it, for what kind of actions, where. And so this is all part of the contingency planning exercise, and the government will create a plan, and the Replica partner also creates one as well, that defines a number of activities that will be put into action and a timeline for that and who will do it if funds are released according to the different severity of events and the amount of funds that are released. And then the third bit is obviously taking out the policies, so that then buying an insurance policy using donor funding. We're very lucky to be supported by KFW and BMZ for these last few years under the START network. And it means that basically when the trigger is met, we know that we will get a quick payout from ARC to be able to work alongside the government to put in place those pre-agreed plans to support communities at risk. So if you go to the next slide. Obviously, Lesley already mentioned the situation in Senegal in 2019 that prompted a large payout for both the government and START network. And if you go to the next slide, and what this looked like in reality for us under START network is through this payout, we were able to channel funds to START network NGOs that had been involved in that preparedness plans and were in fact already pre-identified through that contingency planning process, which meant that they were able to commence interventions to support communities. One thing just to add is that obviously early 2020 was COVID as well. So it was a particularly challenging context in terms of getting that implementation going quickly. And one thing that we noticed, which was interesting, was that you know, there was a moment at which all activities obviously were frozen to some extent across the country, but actually the NGOs were able to get going much faster than some of their other counterpoints for this particular Replica-funded initiative because of all the preparedness and coordination that had been done with the government in advance, which meant that it was quicker and easier for them to get going in the face of the COVID situation. So it shows an additional aspect to that pre-planning side. And then if you go forward. And finally, Lesley mentioned some of the evaluations that have been done, and on the Start Network side as well, we conducted a fairly large-scale impact assessment in which I think we surveyed over around 3,000 households at intervals by telephone over the course of the intervention, and we were able to gather some really interesting learning. And the strongest findings were about them being able to protect nutritional status, so for avoiding having to skip meals, able to maintain food intake and aspects around that. So there was some really kind of, and I'd suggest you to go and have a look further on these links to have a look at it further. So I think the last thing we were asked to do is just provide a couple of thoughts on challenges, because I believe we're going into breakout rooms earlier just to kind of prompt thinking of the group. And maybe just from my side, a few things to add. I think the first one is that the idea that we can't kind of model the whole world. So what we've seen through the ARC Replica initiative is the use of insurance being absolutely really great for these types of large-scale events that are quite rare, that require very large amounts of funding available quickly. And so kind of converting that risk into a premium that you can pay on an annual basis instead of having to hold that full kind of 10 million or so in a contingency fund year on year is extremely effective. At the same time, you know, the models will never represent the full reality in the ground. So if we have the example of what happened with COVID compounding the situation in Senegal, there's always going to be a need for flexible funding as well that runs alongside. And I think one of the biggest challenges that we found at the moment in many of the approaches around around DREF, or the opportunities available to us, is a bit too much of a kind of project focus. So donors, for example, or on our side, we're setting up, you know, an insurance instrument here or a contingency fund there or elsewhere, whereas actually we need much more layered strategies that combine flexible funds along with predictable funds side by side. And on the Start Network on our side, we're making steps towards that. And for example, in one country at the moment where we have ARC Replica setting up, there's an existing forecast-based financing project that we're supporting there. So how can we start to build in these layers where, for example, the forecast-based financing project with its contingency fund may be supporting the smaller to medium scale crises with the insurance layer kicking in for those larger ones. I think just the second aspect to that is the donor story, therefore, as well. You know, I saw some comments in the chat about this kind of stuff sitting quite in the nexus. And I think the challenge is very much trying to, as I say, move away from financing just of one instrument or one premium, but actually moving more towards a story of how donors can support a strategy as a whole in a country that will include a number of different financing instruments. But the focus should be on the plans and the strategy that's being funded rather than the instrument itself, which should be really in the background. And that's just something we're struggling with. And maybe just a third thing, which came up from the discussions that have been had. I think ARC Replica is quite a rare example of, you know, we know there's a lot of basically humanitarians working with the government in this area. We know that there's a lot of work going on with governments around disaster risk financing, but often the humanitarian side, it's seen almost like a failure. Like as a government, if you have to rely on humanitarians, that's a failure in your disaster risk financing strategy. Whereas actually that's not the case. You know, a lot of the poorest countries are dependent on, you know, 60 to 80% dependent on international assistance in the case of a crisis. And obviously they're making really important steps to address that by creating their own DRF strategies and doing things like buying premiums off ARC. But I think that reliance on the international community will be around to some extent. And actually, how can we bring in humanitarian actors into the strategy? So rather than it just being kind of late and uncoordinated and a failure, but actually part of it. So ARC Replica is an example of where the humanitarians have kind of lending their capacity into a bigger strategy. And I wonder if there's ways that we can do a bit more of that as well. But Lesley, do you want to add some bits from your side as well?
No, thank you very much. I think we can go directly to comments and questions if there are any.
Well, thank you both. That was excellent. And thanks also for highlighting that, we want to discuss in the breakout group the challenges as well as the opportunities. So I think Emily and Lesley, you've given us already a lot of ammunition for that breakout session. And at the same time, you've also proven that you can multitask, because Emily, very well done. You've responded to some of the questions already in the chat function. So I think this seems to be working. So can I just encourage everybody else, just take advantage and also type in responses into the chat function, because that will be great. We will then, I promise, have a proper discussion in the breakout session. So this might all feel a little bit rushed, but it isn't. Just write down your thoughts on challenges and opportunities and then keep them for the breakout session. I think that would be the best approach. But many thanks for taking us to Senegal with that presentation. That was great. We're switching continents now, and if I would now invite colleagues Jesse and Mohammad to take us into Bangladesh and explain a little bit about the current work they are doing there, that would be great. Thank you so much for joining us.
Over to you, Saju.
Yeah, I'm hearing you. Thank you all and good afternoon, everybody. This is Mohammad Shahjahan. Actually, I am working with Bangladesh Red Crescent Society. Since inception of forecast-based action in Bangladesh, we are working together. That means Bangladesh Red Crescent Society with the support from German Red Cross, and we are also closely working with the WFP. So now so many stakeholders, so many UN organizations involved in Bangladesh. I will later on explain more details about the stakeholders. But now it's proud for us. There are so many stakeholders involved here. So now sometimes it's very difficult coordinate with all of the stakeholders, bringing them in the common platform. But we are trying to do that. Yeah, please go next slide. So already Kara also clearly mentioned about the anticipatory actions. So here is another definition. What is anticipatory action? It's actually an innovative approach that uses weather forecast to take anticipatory actions and also release humanitarian funds or any other kinds of support to the community before a hazard occurs or before a hazard landfall. So for implementing anticipatory action, actually we have three main components. One is like trigger. We need to know what is trigger. That means we have some kind of threshold. So when we will go for actions. So like for flood, we have some threshold limit when humanitarian need is needed for the community people. And also for cyclone, also we have some threshold when humanitarian organization will go to the community for taking actions. Then when trigger is reached, what kinds of actions we will take or what kinds of anticipatory we will implement in the community level or in the district level or sub-district level, or what kind of actions we will take at the central level. That is the fee-defined actions. So that actions are decided by consultation with community people, by consultation with so many stakeholders, and also finalize consultation with the government and some other government stakeholders like Met Department, flood forecasting and warning centers. So all together we have a finance mechanism how we'll implement this activities from where this from where funds will come. That's why you have a finance mechanism. So when trigger reach and predefined early action is identified, and we will go for action immediate, and then find funds is released. So, and all together who will do what, when we will activate, how we will activate, who will involve where and also rules and responsibility, everything is mentioned in the early action protocol or standing operating procedures. So we have currently 2 early action protocols. So one is for cyclone and one is for flood. For flood, we are working jointly with UN organizations and some other organizations. I will explain later on. But for cyclone, that means the tropical cyclone, so we are the one partners jointly working with Bangladesh government. Yeah, please go next slide. So for collaborating among the stakeholders, we are collaborating so many stakeholders. Like for government, we are collaborating with Ministry of Disaster Management and Relief, and also a Department of Disaster Management. Actually, Department of Disaster Management is the main stakeholder who are responsible for implementing anticipatory actions or any kind of response activities in the field level or community level. And also we have very good collaboration with the Bangladesh Meteorological Department, Flood Forecasting and Warning Center, Cyclone preparedness program, and local government. And we have so many retrospective stakeholders in Bangladesh, like IFRC, German Red Cross. They are the pioneer in Bangladesh. They bring these initiatives, and we are implementing forecast-based action through the support from German Red Cross and also Swiss Red Cross and AMPROS. And UN stakeholders, and also about the UN stakeholders, Matthew also will give a more explanation. So we are coordinating with the UN OCHA, World Food Program, Food and Agriculture Organization, UNFPA. And we have also INGO, the Princess Stratford Bangladesh, Care Bangladesh, Islamic Relief Council Worldwide, Save the Children. And full fund is Stratford Bangladesh, and also IFRC DREF fund is available. And technical stakeholders, we have also technical stakeholders like Red Cross, Red Crescent Climate Center, RIMES, and also 4-1 Bangladesh. They are providing us for technical issues like introducing impact-based forecasting, providing support and to the Bangladesh Meteorological Department. And recently we have very good collaboration with the UK Met, also World Meteorological Department, World Meteorological Organization, for capacity building of the Bangladesh Meteorological Department, for capacity building of flood forecasting and warning center. And we have also financial service provider. So we have MOU with Bangladesh Post Office, Bank Asia, Bikash. So they are the quick financial service provider. So for releasing cash to the community people, for our beneficiary, they are providing us support. And we are the member of the anticipation hub. Please go next slide. Yeah, so for flood, we have 2 stages trigger. One is called probabilistic trigger, and other is deterministic trigger. So for stage 1, we are calling it is the readiness trigger. So when a readiness trigger reach, it's for readiness trigger, we have 15 days lead time. And when there is a likelihood 50%, that means that there is a chance of flood 1 in 5 year return flood, then we activate our readiness trigger. So within readiness trigger, we are completing the beneficiary selection. We are completing which area we will give more priority. So for that, we are using impact-based forecasting. And as in the second stage, that is called activation trigger. So when activation trigger reach, in that time, we are releasing fund to the community people for taking the early actions. So for activation trigger, our threshold is when danger level reach in the Bahadurabad station 0.85 meter above the government danger level. Please go next slide. So about the scaling of forecast-based action in Bangladesh, already I mentioned so many stakeholders now involved in Bangladesh. I should mention about the German Red Cross, World Food Program, because this three organization first brings anticipatory in Bangladesh, and now so many organizations involved. And last year we did anticipatory actions very successfully under UN SURF and in the flood region, and also under IFRC DREF window fund. We implemented anticipatory action for the cyclone area. So successfully we implemented, and also this year we also activated anticipatory action for the flood. That was very small scale. And we have so many success, and due to the advocacy of Bangladesh Red Crescent Society, German Red Cross, and World Food Program, our government recognized this anticipatory action. Now they also own this program, and they, as a result, they incorporated this anticipatory action within Bangladesh government policy document that is called the Standing Order on Disaster. And under that policy document, there is a task force, and their task force rules and responsibility clearly mentioned in the SOD. And this year, two task force meetings happened. Last task force meeting organized by government in June. And we have also technical working group. So under the technical working group, we have UN partners, we have Red Crescent, that is from the Red Crescent Society. We are leading this working group. So now I am handing over to Jesse. Maybe I am taking more time. So over to you, Jesse.
Thanks, Saju. We can go to this next slide. I put this slide here just because I wanted to reflect on the years, since 2015 that we've been working with the Red Cross on building out this anticipatory action plan. And it was always in view of scale, and we always knew scale meant including more and more organizations and more different types of people together. And so you might have seen in the last slide that we had around a couple 100,000 people covered with anticipatory actions last year, and now we're moving that more and more to reach scale. But scale in Bangladesh, as you know, is pretty relative. So we can go to the next slide. I wanted to put this slide together just to give everyone an idea of how we're managing this idea behind definitions on how we're describing the work that we're doing. And it's all come down to of course, trying to bring things closer and closer together to reach scale, but also being able to have a clear communication structure with others that are investing in these pieces. Obviously, being the World Food Program, we've been anticipating impacts on food security at scale for many years. So it's meant that for me to be successful within WFP as the global coordinator of this work, it's meant that I've had to have a clear communication, a clear pathway with folks that are already implementing much of our tools at scale, like cash-based transfers and food assistance and so forth. And so what that's meant is had a bit of a review of the timeline. And on the above part of this graph here, you see a typical timeline, generally situated around when the harvest fails. While on the bottom graph, you'll see that we're starting to look at actions that happens before the rains fail. And there's a big difference there. Meaning before the rains fail means we can implement actions that mitigate the loss of rain, right? The below average rainfall, which allows people to take advantage of what's left in order to make sure they continue to survive on what's available that season. Whilst then it also makes sense, as we heard from Sophie, who had a very good points, was two things, right? It's just finance itself is just a tool. We need to also connect these with plans, which this is a big component of anticipatory actions. But then how does it get wrapped up into what we're already doing? And so on the bottom graph, we put where do we see our micro insurance payouts? Where do we see our ARC coming in, our ARC replica that's been mentioned? And how do we start to look at these as financial packages, but also attached with the types of actions that we want to see happening on the ground? And so having this calendar or this crisis timeline, not around when we would typically deliver food, but around when the driver itself, when the rains themselves fail or becomes a flood. When can we shift that calendar upwards? And then we can start to talk about how these things come together. Go to the next slide. This also helps us with the broader piece. WFP and others are working at building capacity within government systems, ensuring that these are transferred over. As we heard from Saju, this was built on the Flood Forecasting Warning Center in Bangladesh. This has been with support from other agencies. Just because we build capacity in an early warning system doesn't mean that it's only for anticipatory actions. It's also for early response. It's also for the black swan events. It's also part of a broader piece of how we need to bring this together, which is exactly why we're a big partner with REAP. While we support the work towards 1 billion, it's a big piece that needs to come together. And so one of the ways that we've found to communicate this has been discussing along a calendar of events, which is exactly what I think Sophie was mentioning. How do we start to wrap these pieces together to reach scale? And I think that's really where then our expertises can come together. I don't need to reinvent cash-based transfers at WFP. I just need to use them in the correct way. And that, in our case, is before the hazard has struck. Next slide, which I think is my end. Yeah. Thank you very much.
Okay, well, excellent. I hope that we can use those slides, particularly the timeline, as a guide for the breakout discussions, because I think it's a really good way of visualizing, you know, where in the process you are, what the tools are, and how, you know, how that can be shifted. So thanks both. That was excellent. I would like again to encourage people to write down thoughts on challenges, but also opportunities. But before we then discuss those in the breakout sessions, we have one more input presentation. And I would like to call on my colleagues now, who are, let me just, I think if we move on the slides here. So this is a presentation from Nazira and from Colin, who's with the UK government, with the Actuaries Department, and Nazira is with the IFRC. Yeah, we're looking forward to your input. Over to you. Thank you.
Great, thank you. So I'll get started and then hand over to Colin. So I work with the IFRC, and specifically within the disaster team. So we have the fund, the Disaster Relief Emergency Fund, DREF. And within the DREF, we have the forecast-based action by the DREF. Many of you might have heard us already talk about it, but today I will be focusing a little bit more on the topic at hand, which is what led us to start exploring other options for financing the FBA by the DREF. So if we can move to the first slide, please. As many of my colleagues mentioned, and I think Emily and Jessie as well have talked about this, about the fact how we are structured at the moment and how we are start to think what could be doing difference to ensure that there is enough financing for the whole anticipatory action and the early action protocols that we heard described in detail by Saju before, and how it functions in the field. And our responsibility is the whole making sure that funding is available when it's needed. So the forecast-based action by the DREF, like I said, it's a centralized pool fund at the moment. And the way it works is that donors contribute to the fund, and then the fund disperses the financing to the Red Cross, Red Crescent national societies to do early actions. And there are three pieces of the funding, and this is what it's important for our discussion as well at the moment. We provide funding for national societies to do readiness activities and pre-positioning. And I saw that in the chat there was a lot of discussion about this readiness being the capacity strengthening to be ready to act either for early action or early response. So these are the two first part that the fund supports. So once a protocol is approved, they receive funding for readiness and for pre-positioning of items that they may need for the early action. And the third piece is when the funds are dispersed for the actual early action. National societies can apply for around 350,000 CHF for each of their early action protocols. And the protocols, they stay in place for 5 years, because it's at the moment we are targeting extreme events, so events that more or less happen every 5 years. So the idea is that the funds stay in place for that time. Can we move the next one? So the first two parts, the readiness and the prepositioning, they get dispersed immediately. So when we sign a contract, the National Society get their protocols approved, those funds are immediately dispersed by the FBA, by the DREF. But the early action we hold. Next one, please. So this is the next. So this is the part I think that we have to discuss now. This funding, as we have more early action protocols, since we continue to hold those funds until they are needed for the early action, that led us to the discussion, well, this is not maybe the best way of optimizing these funds, because we don't know at what time during those 5 years they will be needed. They might be needed immediately, but also they could end up being reserved only to be used in 2 or 3 years. So that led us a little bit and start thinking about the discussion. how could we explore other models to financing the forecast-based action by the DREF. And this is coupled as well with something that we heard before from Cara and from others about our ambition to scale up anticipatory action. So in order for us to do what we want to do, to reach more people, to cover more geographical areas, we have to find the best use and the more efficient use of the funds. So if you, next please. So if you look at the number of protocols that we have approved, this is the latest information that we had. So at the moment, we had already 15 protocols in place. That means that for 15 early action protocols, the fund at the moment is holding the committed funds to pay out for those early action protocols when they get triggered, which might happen, like I said, anytime during the next 15 years. Next, so if we look then, there are still 20 more protocols under development. So that will lead us that in the end, maybe in the next couple of years, we might be already having 35 early action protocols where we have the funds. Part has been dispersed for the readiness and the pre-positioning, which is one of the strengths of the fund. And then the other piece will be sitting here with us to hold these funds until they are needed. That discussion then we started having with the Center for Disaster Protection, and we support also with the Government Actuary Department. What can we do to think different, to make sure that we are using the funds in the most efficient way? And that's what led us to do this work with the Government Actuary Department, which is what Colin will explain now. Over to you, Colin.
Thank you very much, Nazira. And I think that's a really good introduction to kind of the work that I'm going to be talking about. I think if I were to summarize it in one sentence, it would be about redefining overcommitment. In other words, promising to support more disasters that might happen than we've actually got money to support if they did all happen. So redefining overcommitment as optimizing coverage. So the idea is that we can cover more than we've got money to support at any one time, because fundamentally not all of those disasters that could occur will occur, and they certainly won't all occur at the same time. So that, if you like, is the key conclusion of the work that the analysis we were doing to support this work for IFRC and the Centre for Disaster Protection. And therefore there is the potential to use the funds that are available to meet a greater number of needs, to support more people than would otherwise be possible. Now, if we're going to do that, we've obviously got to be very careful about planning how we're going to make the right balance between meeting the commitments and maximising the humanitarian impact. And so that means thinking about what risk are we prepared to accept of running through all the money that we have got available, and if that does happen, what are the options for making sure that we can then access more money to support those additional events. So I'll talk a little bit about those bits as well. Could I have the next slide, please? There obviously isn't much time to go through this in any detail, and I'm also conscious that the numbers and the chart here are quite small, so there's no need to sort of read all the detail on here. But the point is that we did some analysis with generic protocols, things that could happen, and we were looking to see, well, how many of these events are actually likely to happen within, say, a 1-year period. And so the chart on the left is actually showing, for a given set of assumptions, what's the probability that we would use up all the money. And in this case, the money was set aside to cover 11 early action protocols. And so clearly, if all those 11 happened, we had enough money to cover those 11, there'd be no chance of going through, of running out of money. But then we say, well, how many more similar sized risks could we cover and still not risk running out of money? And that's what the x-axis shows here. So we can add another 10, 15 protocols, so more than doubling the number which are being covered, and still have a vanishingly small probability of running out of money. And it's only when we go beyond the 16 and up to another, well, if we added another 25 on, and by that point, you know, we'd be almost certain to run out of money, and therefore we couldn't go that far. But the question is, therefore, how far can we go when given an acceptable level of risk? And the table on the right shows for different probability levels. So, for example, the fourth row, if we're prepared to accept a 10% probability of running through all our money, well, we can support another 18 on top of the existing 11. So that's a lot more people being covered. Okay, that's for a given set of assumptions. If we assume that those events are more likely to happen than in our basic model, we can cover some more, but a slightly smaller number. And if we increase the correlation between different events, if we assume that if one happens, it's more likely that another one will happen, again, that reduces a bit the number of additional events we can cover. But nonetheless, we can still support an awful lot more of these and not run the risk, a significant risk of running out of money. So I can now move on to the next slide. The final piece of the jigsaw, if you like, is, well, how do we manage these funds then, and what do we do if the money does run out and we run into that small, the 10% probability, the 5% probability, or the 1% probability of having gone through all our money? So the next slide talks about what those options might be for managing that residual risk. And we're going to group them into three different groups. In the first group, it was where the IFRC themselves retained the risk. So they were going to manage from within their own resources from elsewhere or from other means to handle that risk of running out. The second group is where that risk is transferred to donors. So if we can find some donors who are prepared to stand by and offer additional money should it be needed. This is kind of working with the getting the donors involved in the sort of the underlying risk management strategy, but in the way I think that Emily talked about earlier on. Then that would be another way of handling these by the small risk that's left over. Or finally, could we transfer it to the external market? In other words, could we find insurance companies who'd be prepared to take on the risk that a large number of these events happened? So those are different options, and the final slide I've got just does a very quick sort of how do we look at evaluating those different options and see which ones were good for which things. And I'm not going to go through all the detail on here, but the main criteria that we were looking at were around how certain can we be that we can provide the support where we promised it, who is it ultimately who's taking the risk, and just how easy is it to implement it. But I think the key thing to recognise is that in all these cases, so the most important criterion in many ways is that we are actually able to protect a lot more people than we would otherwise be able to do. So that's the first column here in red, is kind of all of the options that we considered here are achieving the objective of increasing the number of people who are being targeted by these early action protocols. The specific options that we looked at here down the left-hand side are sort of some of those that fell into the categories that I mentioned on the previous slide. Again, I'm not going to go through all of these in detail, but there were things like, well, what if we decided that we'd only promise part of the money that might be needed and keep some of it back as discretionary, depending on how well we were doing overall in the fund. In many ways, that's not really good because it doesn't provide the recipients with the certainty that they need. What about if we were to find some other source of within the DREF, within the IFRC for when we needed it, or self-insure within the IFRC? There are mechanisms for doing that. But obviously, if we can find donors who are prepared to stand behind this, then we can do this without diluting anything else that's going on. And that's really going to be positive. So those are sort of the things towards the bottom. And having looked at those different options, it does seem that there's a lot of possibility here for achieving more with the finance that is available. And it's kind of in exactly the same way that insurance companies will cover, far more people than, if everybody had called on their insurance at the same time. That's not something that's ever going to happen. So the insurance company doesn't need to worry about that. So using the same kind of principles, it's possible to use the money, the finance that is available much more efficiently within the IFRC and the DREF in this case. So our recommendation is that we should look in a lot more detail about how we might implement some of these options, and particularly discuss with donors, potential other investors or insurers about the mechanisms by which these sorts of things could be achieved. And I would just like to finish by saying the report that we wrote on this is available on the Centre for Disaster Protection website. And we are very grateful to the Centre for supporting this work. And we look forward to the ongoing discussions around using this sort of approach for enhancing the early actions that we've been talking about.